Good morning, everybody. Welcome to the Flow Show. Friday at last. It's only been a short week, but it feels like a long one. How you holding up, Kate?
Just, Ryan, just. Good morning, everybody. No, very happy it's Friday. And let's have a nice weekend after this day.
Yeah, absolutely. I've got a. I'm going to be beside the seaside this weekend. I'm travelling along the coast of Brighton to watch my team probably lose.
Oh, okay.
Yeah, taking my son to another away game. He's
Don't
clocking up the grounds now. He's done three.
oh, don't forget your sunglasses.
Yeah, exactly. And me trilby. Right, let's get cracking. PBOC's Pan, head of the China Central Bank, said that China's monetary policy is to remain moderately loose, giving no signals away as to whether there's going to be any rate cuts coming. Later on, China's Politburo announced via Xinhua News that China will cut its RRR and other rates when needed. So they were touting Q1 as a possible cut time, but they never did anything for that. Probably waiting for this tariff stuff to pass by and get resolved, whichever way that may be. China's foreign minister, again, doing the rounds around the country, trying to drum up support, saying that China and Switzerland should jointly respond to anti-globalization challenges. We've had some fun and games between the US and China over what's going on with negotiation tariffs and whatnot. Yesterday afternoon, evening, Trump came out and said that there had been a meeting with China that morning and that they had a meeting this morning, but it doesn't matter who they is. Who knows? They could have bumped into each other in the lift and he's calling it a meeting. But anyway, he's making noises that there have been meetings, talks, whatever. Then we got Bloomberg sources piece saying that China is potentially looking at exempting some US goods from tariffs due to rising costs that they're seeing their side. So we had a bit of a mood swing, further sort of de-escalation noises coming in that things may ease off. That's from Trump and Bloomberg. But then we had the Chinese foreign minister earlier on this morning in their time saying that, or sorry, the foreign ministry talking about trade talks with the US, saying that China and US are not having any consultations or negotiations on tariffs. And the US should not mislead the public on talks. And then speaking on those potential tariff exemptions on some US goods, says, I'm not familiar with the specifics and I refer you to competent authorities. So there's still a stalemate going on here. And Kate, I don't know who to believe. Do you believe the Chinese or do you believe Trump and the
I
US?
have my I have my theory about that. I think one of
Okay.
the White House juniors went to have a Chinese takeaway, so he met with a Chinese person. So maybe that's the one that Trump is referring to. Nah, I mean, who to believe? It's just a game of ping pong right now. The one thing that we can say um, is that Trump is trying to get the Chinese at least on the phone, and the Chinese by of course they will have a good reason, and prices are going up. So exempting some of those goods from those very high tariffs, they are small signs, right? That some things may be moving soon. Okay, we also heard from Besant earlier this week, and I mean, just I mean to look at the overall pictures, it's impossible that US and China won't talk to each other at one stage. By the way, I mean I don't know whether there's those work groups are still in place, but remember that at the end of Biden's tenure, they had regular workshops together. And we haven't heard from those. Maybe Trump said stop them all, but I think there is some embryo of the start of talks, perhaps, or at least getting in contact with each other.
Yeah, well, I mean, they have all been in Washington this week for IMF,
Mm.
WEF, G7, G20, all that stuff has been going on. So they are all in the vicinity of each other. But yeah, we're just playing this. It's a pure pantomime at the moment, and that's pretty tough for trading. But we've played this game before. We played this game in Trump 1.0. Back and forth. You've got to know the Chinese. They're not going to come running cap in hand like a lot of the other countries done, trying to get deals done. As the Reg says, they've got a point score to their own audiences, to their own
Mm.
citizens on both sides, so they can't be seen to be bowing to US demands. They have to make it out like it's a negotiated best interest for China type thing. So yeah, they are going to play more hardball on the surface than some other countries, and you just got to remember that with China. Right, coming across to Japan, and this one's a bit deja vu as well. Japan is weighing up buying more US soybeans as part of a tariff deal, according to the Nikkei. Yomiuri saying that they might also pick up more corn imports. We also had Brazil out saying they've had a bumper harvest of soybeans and the like, and so they're going to look to increase exports to China. Soybeans was a big old bum fight, as I say, in the first Trump presidency, and they got lots of deals done and whatever, and I don't think any of it happened anyway. So that's the other thing to think about in these negotiations. We may get headlines saying that everyone's going to get on with everyone else, but it doesn't mean it's going to happen over the next 4 years and come to pass anyway. But that's where we are. Japan is still trying to grease the wheels, shall we say, to get a deal done. Finance Minister Kato said that Besant reaffirmed the G7 stance on FX. So that's something that Japan looks at pretty much every G meeting to see whether the lines in their statement that they release change about FX and about how they should move with market fundamentals and blah, 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 blah. So Besant has apparently agreed with the current statement that's been ongoing for some time. So looks like there's not going to be any currency friction in discussions therein. Just before we move on to the data, just want to keep you updated on the sale that we've got on there for our platform, Forex Analytics platform and chat room, 40% off a monthly subscription. You can grab that, and if you've not been following us on the Flow Show for too long, you can get on our chat room and you can have basically a Flow Show all day long if you so wish. But take advantage of that. We help out a lot of traders. The community helps out a lot of traders if people are running into trouble. Doesn't matter what it is, trading, psychology, all the rest of it. There's always someone there to offer a hand. So in these volatile times, when markets are uncertain and we've got big volatility, you really should be somewhere where you can have the support and backing of people around you. Anyway, let's go on to some data. And we had Tokyo CPI, which, I'm not even set up for that. Look at that, which pretty much blew the doors off. We've had a couple of doors blown off in the data recently. Firstly, Tokyo core CPI coming in a whole 100 pips above where it was last month, 3.4%. Headline CPI coming in 3.5%. Some of those other measures as well coming in much higher. The ex fresh food and energy, the core came in at 3.1% versus 2.2% prior. So a big ramp up here. I haven't read any details into this, Kay. I'm not sure if it's maybe a bit trade related, again, a bit of all that front running stuff or whatever. But on the face of it, it's hot numbers.
Yeah. They also started the new fiscal year. There may be some price hikes in some stuff. So I didn't really dive into details either. But yeah, on the face of it, it's going to be a surprise. But next week's Bank of Japan, if you look at the data, they may hike. But of course, I mean, there's so much else going on around it now. Most of the market think that they will remain on hold. The one thing I know is that I'm probably going to be not running too much of a yen position going into the Bank of Japan, because it could be like extremely binary. Because Ueda surprised us once at the end of last year. He could do it a second time, especially that. And then talking about other stuff going on, those trade talks, Kato and Besant clearly did not discuss any yen levels. Besant already said that they were not going to discuss any specific levels, but everybody who is trying to manipulate their currencies should withhold from it. But I we know that Japan is not manipulating the yen lower. Okay, especially not nowadays. May have been different at the start, or the start of Abenomics and with Kuroda, but I mean, past years there's been no manipulation of any sorts in the yen. In contrary, I mean, they have intervened to buy yen, right? So I think those currency talks, they are going to go as usual. As you already said, they repeat it at virtually every meeting. The fundamentals are going to drive the yen, and then we saw the reaction that the market had overnight. Okay, a bit of positive news perhaps on those China tariffs, but I also think a lot has to do with the market perhaps expecting something about those currency talks, that the Japanese would come US way, but instead of that, they are buying more soybeans. So we are going to have soy sauce made m- made in Japan, but originating from America then. And that's about it. Yeah, that's about it. The only thing I know is I'm not going to have too many yen positions going into the Bank of Japan, because we could have a surprise. I mean, for the time being, I'm rather looking at the yen perhaps trading a little softer across the board, but certainly not next, what is it, Thursday or Friday?
Yeah, yeah. The definite price risk is that they do something
Yeah,
because everyone's expecting them not to. So, and then we just have to judge it on what happens if they do hike. It'll be a surprise. You're going to see the yen gain, but we'll
yeah.
have to see what the yen's doing or the other crosses are doing at the time to see whether that's something to go with or to maybe look at a fade. I'm inclined to think of a fade depending on, if dollar yen's ticking up above 145 because everything's hunky dory with trade and whatever.
Mm.
I think that's. I mean, we both said about it. Look likely to buy a dip in that situation on a surprise hike. But yeah, long way to go, and a lot can happen between now and next week. So certainly not setting my trading stall out just yet. Right, moving on. We had a small bit of data out from the UK yesterday during the show. CPI industrial trends orders coming in at -26 versus -29 prior. Selling prices was up a pip at 23 versus 22. So a little less crappy looking over there for the industry side of things. This morning we had retail sales and another bumper set of numbers, really decent numbers. We had a slightly lower revisions to last month, but the market was looking for negative numbers for March, and they all came in positive. Kay, what have you been buying? Have you been hitting Majestic again?
I did pay a visit, but only one. And strangely enough, it happened during my trip to Japan. So I trust it's you went completely ballistic on beers and wines and steaks.
Yeah, I think. Well, no, I did buy a bottle of gin. Yeah, that must have been it. It was a big
No,
bottle of
that's
gin.
it.
So yeah, that may have been it. Indeed. You've gone on mute, mate.
No, no, I didn't say anything.
Oh, okay. Okay. Yes. Anyway, decent set of numbers there from UK retails. Long may it last. We shall see. Certainly wasn't.
Well, I mean, Ryan, I just was going to say, I mean, those are still March numbers. We've seen those March numbers in many countries. people front running what possibly may happen on the tariffs. I think we should still rank it in that category, no? And then we will see what happens with all those data starting April. Like if you look at the consumer confidence on the other hand, which came out at midnight our time, that actually dipped. So I think we're gonna have to see what those numbers give or tell us once the tariffs are in place now.
Yeah, absolutely, mate. And so we have BOE's Bailey out again, telling us everything we already knew. Said tariffs are going to have a negative effect on growth, and the talk about the potential loss of the dollar reserve currency status is overdone. And then he decided to go do a bit of hope trading, saying that he hopes the upcoming UK inflation bump is transitory. There we go. We got both words in there, hope and transitory. Love it. UK Chancellor Reeves, this one made me laugh when I saw it earlier, says the UK is not one of those nations with debt near 100% of GDP. So I thought I'd look it up. Our debt to GDP is 95.9%. So absolutely nowhere near 100%, of course. I don't know what... Shut up, Ryan. Don't rant. I don't know how she's staying in this job, to be honest with you. Let's get over to the cheese eaters in Switzerland. SNB Chairman Schlegel says the economic slowdown in Switzerland, or an economic slowdown in Switzerland, cannot be ruled out. The trade policy situation is creating high uncertainty for all countries, including Switzerland. The ever bullish Nagel, his bank, the Bundesbank, said that German GDP could suffer a setback in Q2, and the outlook is significantly clouded. German GDP probably increased slightly in Q2. We then had confirmation from the German government on its forecasts, as always hinted by Handelsblatt a few days ago. They see stagnation coming in 2025, cutting their forecast to 0 from 0.3% previously for this year. And they see a whopping 1% growth in 2026. They see inflation easing to 2% in 2025 and 1.9% in 2026. Nagel was actually out after that with some comments saying we are fairly certain the inflation effect of tariffs will be stronger in the US versus Europe, and says the effect on growth will be significant in Europe and Germany. ECB's Lane says there's a reason for longer term optimism on the economy. Says European economy is growing and showing resilience. Kay, what numbers are these clowns watching when they say the economy is growing? It's been flatlining for the last 2 years. I don't know where they get these ideas from, or are they just trying to talk it up?
0.001 growth is an achievement for them these days. I don't know, Ryan. I mean, I really don't know what they are looking at. For sure, they have a different calendar than the one that we are looking at.
Yeah, definitely. He also said that they won't pre-commit to any rate path, and also joining Ren in saying that there's no reason to say 25 pip moves are always the default, so indicating that they have got the potential to go on larger policy moves. Hawke Holtzman says rate cuts must wait for more tariff uncertainty, but he says the next policy steps are completely open, clear as mud. Markets, though, see a June cut coming. They're fully pricing in 25 pip cut at the next ECB meeting. It will be a star forecast meeting, which is usually seen as when they would like to cut because they get their updated forecasts, whatever those are worth these days, given the mess that's going on. So how they're going to... We're probably going to get these forecasts, and then Lagarde will tell us to ignore them anyway because no idea what's going to happen over the next few months, a bit like Canada. So
when is that 90-day pause period ending? July, no?
It's 90 days from that Rose Garden event.
So what is it, like early July?
Yeah, something like that.
I mean, it makes me think that some of those central banks who meet in June may actually be waiting a bit, no?
Probably.
Unless we get, of course, trade deal news well before, which we should, in theory, get.
Yeah, I shouldn't imagine we'll have much that's going to go kicking up to the 90 days, or else we're just going to have all the more volatility coming in. But you never know. We could get a deal tomorrow, or it could all drag on and drag on and drag on and drag on, like it has done. I mean, we've had this will be the third deadline or fourth deadline. I lost count. Third.
So I was
Third
just
deadline.
thinking, like the chances of cutting rates is obviously going to be higher if there is no trade deal, right?
Yeah.
But if there is a trade deal, or if there is positive talks, I'm just thinking like perhaps the market is expecting just that little bit too much of a rate cut. That is where I'm at right now. But obviously we are miles away from June.
Yeah, agreed with that again. And certainly we can't trade what the ECB are like to do in June this
No.
early because we don't know what's going to happen. But that's a good thing about being a retail trader. You know, we're not a bank. We don't have to issue a forecast and stick to it for 2 months. We can change our minds like the weather because it's our money and our trade. So that's good for us. Right, knocking back to yesterday, US data, initial jobless claims, nothing going on there still. Durable goods, I was talking about the doors off. This one was a bit of a surprise when it first popped up. Durable goods orders up 9.2%. Ex-defense up 10.4%. Big numbers on the face of it, but you always need to look under the hood with durable goods. There were a couple of big transport components, non-defense aircraft that rose 139%. Okay, these are when you get aircrafts coming into these numbers, they're obviously what's called big ticket items, millions and millions. So when you get big bump up in orders, it boosts those numbers massively. Core goods came in flat, and that tells you the real story about that. It was a bit of a surprise when I saw those numbers popping up. We've got a bit more housing data later on as well. Existing home sales, a little bit of a miss, 4.02 million versus the 4.14 expected and 4.27 prior. So it was a drop of 5, just under 6%. However, housing prices for existing sales stayed upbeat. They were up 2.7% from this time last year and up 3.8% from last month. So we saw a bit of a softness in the new home sales pricing, but these ones holding up okay. Overall, we've had all the main housing numbers for March and not any big red flags to worry about there. Yet again, hard data not aligning with what we've seen in survey and sentiment data. Fed's hammock says uncertainty is really weighing on businesses and planning. She currently has no base case. Is looking at multiple scenarios for the economy. Says the Fed could move in June if the data is clear about the US economy's state. The old big if. Fed's Waller says we're not likely to see clear tariff impacts by July and says that the second half of the year is to bring some clarity on that tariff impact. So that is a bit of a big wig. So that certainly puts him in a holding pattern for the rest of the first half of the year at least. Fed's cash and carry says the businesses may plan layoffs if the uncertainty persists, though there's been no uptick yet. And then he's had a bit of a moan up at the communication from the White House, saying the frequency of announcements out of Washington has created a challenge for policymakers and everyone else. He's got a bit of a point, Kay. I mean, every day we're getting Trump, Besson, whoever. Don't they need to just take a break for a bit?
They can't because they initiated this themselves. They have been doing it from before the elections. So I think they can't just stop. And I don't know. Well, I mean, I don't like to use the word because it's okay. I mean, could be misunderstood, but anyway, I mean, and just to make the comparison, it's like a bully. You always make a lot of noise in the hope to silence the other ones, or to get or to get responses which may show weaknesses by the other party, to then jump on it to get to achieve something. So I think they initiated this and they just can't. But I mean, everybody's right, of course. I mean, it's an overload, and yeah, I mean, it's very hard. But then they are not talking to traders, right? Although they're talking to their friends, that is for sure. But no,
Yeah.
they are not talking to traders. They are talking to the public and to other politicians, and that is what you see in every parliament. Barring a few. If you want to get hurt, or if you want to people to remember what you said, you have to say it 10 times. And I think they're in this kind of scenario. But doesn't make our life or central banks' lives easier. Um, but then yeah, that's just the way it is. They started it and now they can't stop.
Yeah, absolutely. Right, quick look at what's coming up later on. Not too much. We've got the final Michigan numbers. See if there's any big variation from those. Also, keep an eye on those inflation expectations. Although the Fed at the moment is not paying too much attention to consumer or short-term inflation expectations. They are keeping an eye on longer-term and market expectations for inflation, but it all plays into the mixing bowl. We also get Canada retail sales as well, something just to keep an eye on if you're trading the loonie. Kate, any other news items, thoughts, wishes, hopes, dreams?
Oh, I don't know. We are too late for Easter wishes. Nah, mate. I mean, we covered most of it, and I think that's fine.
Thank you very much, mate. Right, couple I want to have a look at. Dollar yen. I know, Ali, you were asking. No, I didn't have a look at 144. It's I'm not in that bias at the moment. I'm more thinking about a dip buy, as we were talking about yesterday, than a rally seller at the moment. So 144 is a bit of a level, but it's not a big one that I'll be potentially looking to trade. Watching paint dry yesterday, trying to see if we got the move down to test the 142 in this zone down here. I probably should have looked at this 4 hour because we couldn't get through the 55H4 moving average, but I didn't get that confirmation move and hold that I was looking for to get long, and it's gone off without me. So no, back to the drawing board on that one. It's still possible we get a dip and a test down there and have this confirmation move, and that'll make it a pretty solid case for seeing a bit more of a stronger bottom going into play. Doesn't mean we're going to be reversing all the year's move, but it just gives it something to build on. But I wouldn't want it going much higher, getting up to 145s and then coming down. That would invalidate the pattern I'm looking for. I want a quick test after this move here around here. It may have already happened, these two little lows, but you know, that's micro managing my thoughts and analysis. So yeah, at the moment looks like we may still have a chance, but it might move into looking at something completely different for the moment. I was also looking at dollar China because we're sitting on a bit of a level at the moment at this 728, but it's a bit of a coin toss. If you believe the US that there's talks going on, then this is probably a sell if they do get a deal, because then we'll see some positivity coming in for China. If you believe China that nothing's going on, then this is probably a buy. But as I say, it's a coin toss. So I haven't traded this one since I got knocked out the balance of my shorts that I was sitting in for ages. So I've been a bit of a spectator. I think that the best, easiest way to play this is to go a bit wider. So I'm going to be looking at up here with these highs to see if they're reconfirmed, 736, 78, and then maybe down into the 720, 21 area. If we get a move to either side of that, and depending why it's moving there, I'll make a decision whether I want to sort of trade that range. A bit like my thoughts on euro dollar. I'm not interested pissing around anywhere in the middle here. 112 or 115 is where I may look to trade, depending on what's happening. We're all getting a bit excited about the Aussie dollar again yesterday, Kay. I've gone in with some buy stops above this 40 because I agree that I was looking at it before, but I agree with everyone else. If we're going to break this now, it's probably going to be a bit of a flyer, but it's being stubborn again, mate. It can't get through, can't hold 64, but it's still not dipping down too far, mate.
Extremely, extremely. I actually bought it yesterday, and it was looking fine until this morning's Chinese comments. But I mean, I stepped out of it just for what we call beer pips, which is like just a couple of pips profit, and just wait and see again to see if it really breaks. But it's it's getting bigger and bigger and bigger, that zone. I mean, the day it breaks, it's probably going to be fireworks, right? And we are going to really uh, fly a little bit at the start of any break. But until it breaks, I mean, we have to pay more and more respect to the level. As it could just hold, and yeah, and being, we know, we don't know, we get different headlines here and there. It is moving sideways as well. So we could argue that it's still like consolidating the gains that we saw down from those 59s, and then shape up for a move higher. I'd say 63, 30, 50 perhaps. That should hold right now. If that wouldn't hold, then that 64 440 is going to be just too tough of a nut to crack. But yeah, I think we're still a lot headline driven here. I'm a little surprised that with the revival, now it's coming down a bit today, but with the revival that we saw in the commodities, that we couldn't even go for a real, like even a fake break. We couldn't even go above, and that still shows that Aussie is really one of the laggards. And actually, if you look at its causing the Kiwi, it's stopping now as well. Although that is still looking a bit better, but it's hold now as well. 60 looks to be 60 40 is there the zone that really needs to crack for it to continue to move. But yeah, both commodity currencies have now stopped and probably waiting for something fresh to happen.
Yeah, I think that 30 level is going to be key because we've had a little bit of a couple of flushes under this 50, 55, 60, whatever. Yeah, I think this 30 levels potentially a bit of a maker or breaker. I'm not saying the whole rally is going to be undone, but it could lead to a bit of a deeper pullback, maybe down to this zone down here. So that's the level you got to watch here. 90 pips. Sorry, 110 pips, 63.30, 64.40. Take your cues from that one. Ali, you're telling people if you get tariffs related positive comment for Trump or Besant, we might get 112, 70, 50. I assume you're talking euro dollar. I'm still in two minds what happens over positive news. Yes, it should be dollar risk on, for that things are calming down a bit, but it depends what country the news is coming against. If an announcement of a EU-US trade deal, tariff deal, whatever comes out, is that going to be positive for the euro, or is it going to be positive for dollar risk? Kay, you've had any updates to your thoughts on what may happen in that scenario?
I think we may see under 113, and then you buy it again. If it's US EU, and yes, it is going to really depend on the country because um, if if you look at the yen, for instance, you may have the opposite effect. That in no deal yen strengthens. Sorry, in no, what am I saying? Yes, in no deal, the yen may weaken a bit more. it's really, I mean, we've seen these moves when Trump said, okay, we are going to give the 90-day pause, and then there is potential to do deals with one and the other country. We've seen the big move down then in euro dollar. The dollar gaining traction, U.S. equities going back higher. So I mean, but then we are stabilizing. That means the market is not yet on board with the whole concept of if Trump and the U.S. scramble back, if it's them scrambling back on tariffs, whether it's really going to be positive for the dollar in the longer term. I'm still right now in the camp that if it's the US initiating because they ran into a weaker position because they have driven other blocks into each other's arms, I think there may be more damage for the dollar actually coming. But okay, it's all going to be a headline by headline and deal by deal. It depends who wins the arm wrestling, right?
Yeah, yeah, absolutely. You can't look at positive tariff news in as a complete opposite of the Rose Garden event when Trump pulled out his border tariffs. Okay, the move from that was pure dollar selling. Didn't matter what currency it was against, effectively, particularly if you were on that tariff list. Dollar got sold wholesale. This is different. If deals are happening, they're happening as cases per country. So you may get a deal in with Europe, you might not get a deal with Japan. So the dollar isn't going to move in one block against every currency. It's going to move. You have to go back to taking each currency and each deal on its own merits. And like Kay says, how the deal has come about. Has it come about because the US folded, or has it come about because the other countries folded and given into US's demands? So it's not as simple as saying, yeah, positive tariff news is going to be good for the dollar, and that's it, and forget about everything else. That's not the way it's going to work at the moment, and it's not the way it has been working if you look at various currencies. So yeah, I don't know, euro dollar, US euro deal. I don't know which way euro goes, whether it moves on dollar risk on or whether it moves on positivity for Europe and euro rises. So
What
it'll be a learning process, and that's and the price action will tell us what it's going to do. Yes, mate.
and I think that's what we see now. If you look at, and we are not going to run through everything, but something. Look at charts, guys, and look at maybe not the dailies or the weeklies or so, because that we have seen moves and stuff. But look at for once at a bit of a shorter stuff. The 4 hour down to the 1 hour, for instance. And I'm starting to see a lot of, if you trace just simple lines, I'm starting to see a lot of triangles, which means to me that perhaps big money or the first leg of at least big flows are likely mostly done, or they are now taking much more time to decide upon what they are doing. Now, for instance, if you if you would take cable euro dollar, we are in the range. We're still finding bits on dips, so I think there must still be some lazy bits here and there in those. The yen is getting a little more less obvious for the one side. So I guess the big money is now probably done with its first leg of big management. We can actually see it if you look at the yields as well. If you look at the bond market is stabilizing right now, right? So that also hints at big flows perhaps taking a breather and seeing what is going to be the next step. Do they need to continue to trade the catastrophe scenario, which is in what we've seen after the tariff announcement, sell everything US, or do we need to adjust what we have been doing as well? But I think we're in this case now where the market is taking a breather, and I just wanted to to reiterate here is obviously we don't see all those flows, but you can spot it in price action sometimes, and see what various um, time zones are doing as well, to see what is going on, what are the people doing in the US, what are the people doing in Asia, to spot if those big flows are done or not, and then you look at the yields as well. But what I'm seeing in today's pictures is a lot of little channels forming. People call it flags. You have little triangles, and it's all over the place. So uh, in everything, even in the bond market and the yield market that Ryan is just showing, we are slowing down, right? So that is where we are now, and you can trade intraday, but to know what is going to happen on new decisions, and I'm not talking about headlines, decisions that we will have to wait to see what big money is going to do with, and then I guess then we are talking about break back under 112 or break back above 115 in
Yeah.
euro dollar, for instance.
Yeah, absolutely, mate. Agree with that wholeheartedly. One more quick one, and I want your input on this, Kay. Keeping an eye on this and keeping an eye on all this Asia buying going on. Not much seen last night around
Oh,
that midnight 1 o'clock period.
hmm.
We only got that sort of one little candle in there. Now, this was amid a bit of selling going on. Let's bring that in a bit. So certainly we haven't seen the likes of this Asia buying today, but it might have been soaked up by whatever selling was going on, China headlines and whatnot coming out. So that needs to be monitored in case we are done with this little run of Asia buying. What are your thoughts on that, Kate? That's been 9 days since this
Yeah,
131 break.
I think we're in, and I'm updated the room today. The technical folks may be looking at that 32, 80, 90 because it could be the neckline of overhead and shoulders forming. But without that, I think same scenario. We are probably done with the big buying for now, and that leaves positioning, right? There must be some really decent positioning, and I was also saying, like, get relatively optimistic lines, although the Chinese have been saying otherwise, but get like relatively optimistic lines. We will probably see gold lose a bit of its shine, to the advantage of silver, for instance, which is holding much better right now. I think there's a bit of rebalancing going on, and also the wait and see. We need to see what's going to happen next. Yeah, that's it.
Yeah,
Um,
right. Let me punch it over to you, mate. While I'm
yeah,
doing that, Ali, yeah, you out
yeah,
Euro
Ali
sterling.
wants to be short euro sterling. I am a little
Yeah,
short euro sterling, Ali. I think we may see the a move down, but I'm not expecting huge moves there for right now. But I first of all going to reply to Derej. Derej, what's the double top then that you're seeing? Just put it on there. Is it this little one in the short term around 113.15? Um, I think we're in, and as I was saying, I'm seeing those triangles everywhere. We are really magneting around 133 at the moment in the cable, and I think if you look at this move, and if you, oh, yes, we rejected the longer term 134.5, but now we are trying to make up our mind. I I'm a, I don't have a cable position, but for as long as those levels hold, and it started around 132, then 132.30, 132.40, 45, for as long as those levels hold, I'm still looking at it as relatively positive, if I may say so. But again, we are in a triangle, and the range is narrowing. So I'm don't I'm not pushed into anything right now. Um, and just look at what's going to happen around 132.5 and 133. Well, you can argue 133.48 as well, but I think 133.60. If that goes again, then we're going to push higher. Inversely, 132.40.50. If you break it back down to 132, the figure, and then we'll decide. Because we could also be doing something like this, or obviously go much faster. But for the time being, I don't really have too much of a view on that. And on the euro sterling, we are in a bit of a triangle formation. I, as usual, don't like those steep lines, but it seems like the market has been trading alongside. So, and that is now very, very close to market. It's around 85.5, 85.48. I'm, this is just a picture, but I do think that perhaps sooner or later we are going to have a retest at least of this 88, 85.20, 85.10 zone, and perhaps have a little look below. It is going to move also with risk. We know that sterling is a bit of a risk currency. If we get like very negative headlines, or indeed very positive for Europe, that could drag it back higher. But then we are going to talk again about this 86, 86.20. For the time being, overall, still in this range, but I would not rule out a bit of a test here of this one. Anything else you guys are looking at? I'm just looking at the clock. Silver, not too much change. Still working on the break. If gold would really come down below that 32, 80, 90, silver would likely perhaps come down a bit in sympathy as well. Let's also not forget that we are closing in on month ends, but the equity markets being quite volatile. I'm reserving my findings until we really hit the value date month end, and that's going to be next Monday. I think we've done enough for today, Ryan. Happy Friday, everybody.
Yep, thank you very much, mate. Friday is, weekend's coming. Hope you've all had a good week. Thank you for coming and supporting us here on the Flow Show. As always, do have a great rest of your day, great weekend. Thank you, Kate, as always, for your stuff this week. And we will see you all on Monday. No bank holidays, no nothing. Normal service is resumed. Have a great weekend, everyone.